Yeah, welcome back. This time we'll try and wrap up with what you have been learning so far, which is the pay calculation. In this video, we'll try to employ what we have learned so far and deploy it to achieve to achieve our aim of doing things. Now, there are a few things you need to know before we go ahead with this. Number one is that tax calculation is usually on annual basis. So what we have been doing so far is just how do I put it, for knowledge sake. It is not what is in practice. So what I'm trying to say is look at the salary scale that we have. All of these, and we did it in monthly, but in the actual sense of things, they should be or would be on annual gross. Now, if there are changes in subsequent months, we'll make that change and maintain a copy of what we have, say in January, for instance. That is number one. Tax calculation is on annual basis, so that when we want to pay for monthly, which is what we do in our organization and every other organization, we'll just have to divide and then prorate for tax purpose, division for for salary payments, and proration when we want to pay tax. We'll see what other things we're talking about very soon now. In that sense, we will create our March salary and we'll work with that. So in order to do that, we just need to replicate the February by right clicking and move or copy in the same workbook. If there are other workbooks, you will see it in case you want to make a copy to another workbook, or you can create a new workbook and so on and so forth. But then we'll select what we have been working on. We'll try to give it a position. I'm going to put it on this salary scale such that salary scale shifts downward to create a new sheet for us in between February and salary scale there, and we must make sure to select create a copy, otherwise it will only move it from its position to the desired position. In this case, it will not move anything because it's still on the, so we need to create a copy and just like that, so we can begin to change things, like rename it to March, so that we will work with this March, and then we'll see how things is being done. Again, like I said, this scale would have to be on annual gross, not monthly like we have here. So let's just put annual gross here. So for this 200,000, we can divide and multiply if you want. If you really want to be paying this much 200,000 monthly, then we need to multiply 200,000 by 12. In that case, I can just put 12 here, and I can say this is equal to this times this and I can replicate like so. Okay, let me lock down this, so I can replicate like so. Then I can copy all these values and just paste them here. Then I can delete these ones like so. So this is annual gross. Now it is what we'll now work with. If you look at our table here, you will see that all of these things have updated themselves. This is annual gross now. Excuse me. Then we can now create a column for monthly gross like so. So like we know, this will just be equal to this divided by 12, as simple as that. So we can have monthly gross. Again, the reason why we're doing this is because tax calculation will be on annual gross, and then we would prorate. That proration, we'll talk about it very soon and you understand what exactly I'm trying to say. So for this scenario, we are going to delete all of this. We will create new ones, such that we just create, let's just insert columns here. We will be working a lot with all of these columns. Now what we have is this is monthly gross, the annual gross. For tax purpose, like we have mentioned in our last series, we only need statutory deductions when we are considering tax payment. For the net, we will consider the statutory and non-statutory together before we get the net that we pay, to the staff. But for tax purpose, whereby we are trying to get the amount we want to pay as tax on that staff, non-statutory deductions are not put into consideration, and we'll see what I'm trying to say. We'll understand very soon. Now, this tax of a thing in Nigeria presently, it is on self-assessment. By that I mean the government allows you to assess yourself and calculate the tax yourself, and you should remit at an appropriate time, such that afterwards they will look at your information and then they will raise audit. That is the time you see those people come to your office or organization to cross-check your books. By so doing, they want to confirm that this gross or these grosses are what you claim they are, in the sense that they want to make sure that this staff, Lagos Ikeja for instance, actually earned 200,000 naira monthly or 2.4 million naira annually. They want to cross-check. They want to find out if that is really the situation. Now, if they find out during the course of audit that there are other emolument that is due to Mr. Lagos and was not included in this payroll, for instance, they will raise additional assessment based on their findings, and then you will have to pay such amount of money that is being raised thereof. If you have objection to it, you can raise objection within stipulated time, giving reasons why their finding is not genuine or is not correct, and then they can arrange what we call tag meeting, whereby both parties sit and knock things out. But that is not the essence of this video. What I'm trying to say is that tax is on self-assessment in Nigeria. That means you should file things for yourself. You should calculate your own tax and make appropriate payment. Then later on, they will come and assess your books by law, or in statutory. So when we talk about PAYE, the very first thing we want to understand is that the more you earn, the higher your salary, the more you pay tax. That is a progressive. That means tax is progressive in Nigeria. So and then there are some certain deductions that you will need to do to reduce your tax burden as a staff. Such things are the pension, for instance. All those contributions that are allowed by law, they reduce the burden of your tax, and that is why you see some companies, apart from the normal 8% pension they pay, they still go ahead to have voluntary contribution. That, in a way, because it's an allowed deduction, it will reduce the tax burden that you pay. We'll go into those deductions now, and you would understand what you're talking about. So the very first one, I don't know, let's still include just one non-statutory deduction, so that we will see for our demonstration to affect our net payment that we will be paying out to staff at the end of the day, because we need to include that just in case for some few staff actually. So here we can just say deduction. We'll do all this later. Penalty, let's just put penalty here, whatever the reason is. Let's say for some selected staff it is 5% on their monthly gross, because what we are actually doing is monthly, but the tax purpose, when we will get to that aspect, will be on annual gross that will prorate. So this should be 1% of gross on some selected staff, 1% of monthly gross. That is what we are deducting for that month. Remember, this is not annual payment, it is monthly payment. The annual gross is for the purpose of tax calculation. So we copy this one for some few of the stuff. Let's see for remaining of these guys here. Now a quick one, if you want to put, you don't want to leave this as blank as this, you may want to put zeros, but if you're having 100 staff and you have few of these empty cells, you need to put zeros in them. You can quickly, you may not be able to, it may not be very convenient to be going through one after the other and be putting zeros. So one way you can do that is to filter things out. I don't know, we may still be using filtering in this series. Of course this is the last one, but then to use filtering it means, you know, to pick out items based on some fields or on some criteria that you want. For instance, now I want to select fields in these cells that are empty. So what I can do is select the cell, the heading of that table. This is the table we're working on. Then go to sort and filter, then select filter. Ordinarily you will see this little small arrow here where you can select it. It will list out all the items in that table, and then you can filter by the ones that you want. Right now everything is selected, that's why you're seeing everything. Now if I select only zeros, now it will bring out just the ones that contain zero. It will filter out the tables, the records that contain zero on this field. Now you can have as many as possible fields, filtering options. If I want to filter, that is just one, I can filter by 2 or 3 or more criteria. Okay, let's just go to our own issue. Now I want to filter with blanks, all those cells that are blank, so that I can put zero in them. It has filtered everything that is blank on this column. So I can just write 0 and then drag down to fill everything up like that. Then I can clear the filter once again, as you will see. So moving on, let me move away from that filter. I can do another video on filter on its own. So that is one deduction, penalty, and as we know, it is non-statutory. Now the statutory deductions, the very first one is the CRF. It's called Consolidated Revenue Fund. It's a general or a standard amount that is given to everybody regardless of what your amount you are earning per month, and it's on annual basis. That is why we need annual gross to work with. So the CRF, we calculate that again is Consolidated Revenue Fund. By theory, it is given as 1% or the higher of 1% and 200,000. The higher of 1% of gross, annual gross, and 200,000 plus 20% of annual gross. So what that means is, if you calculate 1% of the annual gross, if it is and 200,000 naira, whichever is higher, you pick it, and then add 20% of the annual gross to it. That will make the CRF. That is one of the reliefs or the reduction from annual gross before we calculate that. Is the very first one. It is general, whether you are paying pension, NHIF or insurance or whatever, whether you are paying that or not, this CRF is constant for everybody. 1% of gross and 200,000, whichever is higher, plus 20% of annual gross. You add that, whatever the sum you get, you reduce it from the annual gross before you charge tax on it. So that is theory. We need to put what we just say now in formula. As we know, every formula starts with equal sign. So we want to calculate CRF on this manager's annual gross. Now we will be using I would say a very important formula. I don't think we've talked about it, the if statement or the if formula. The if formula is used to check for condition of things. For a certain condition, then we will set criteria for when that condition is met and when it's not met. It's just two, but we can nest. Let's not go into nesting now, but just understand that this if statement is In fact, it's the only formula we'll be using throughout this tax calculation. But sadly, there is nesting ifs, and I will get to that aspect when we are calculating the tax itself. Now we just want to calculate CRF. You will see that the system has brought up some other related formulas for us. What we want is the if. You can use the tab to select it. If it is not the one you want, you can select using your arrow key and use tab to select the one. If is what I want, and I'll tab it. Now it has drawn up the syntax. We call this syntax, formula syntax. If the first thing, if you look at that open bracket, then it has logical test. That is the condition we want to test. That's the very first thing you put inside an argument. After the parenthesis, what we have is argument. That's what we refer to as argument. The first argument is your logical test. What are you testing for? What are you trying to check? In this scenario, we're trying to check if 1% of this gross is greater or less than 200,000. Not this monthly gross. Please don't get confused. 200,000 naira, not this monthly gross. So please don't get confused. It's 200,000 naira and 1% of gross, whichever is higher. That is the condition I want to check. Now at this point, I'll tell you to master the use of using parentheses in mathematical expression, because it will simplify your work for you. Ordinarily now I could have just gone ahead and type what I want, but it should be better if I put things in bracket, like in board mass. Bracket I deal with first, and it simplifies things, and it can even change the entire outcome of things if you don't know how to use it very well. But for now, let me just create a syntax or a skeleton of what I want. So I'll open and close this bracket for my logical test, another bracket. Now after the logical test, after the system checks for that condition, now if that condition is true, what do we want to do? That is the highlighted second what's it called now, argument here, value if true. That means after the system has checked for this condition that you specified in this first argument, the second argument you put there is the value that you want. In this scenario, if 1% of annual gross is greater than 200,000, which is rarely the case, we should pick 1% of that gross and add 20% of the gross to it. That is the law. Do you understand? Now the value if is not true, so we can open a bracket, open and close a bracket for that value. Now the last one is the value if it is false. Now if it is false, what do we want to do? We can open and close bracket for that, and then close my bracket finally. Here I have not put anything, and you can see I have error issue, but because I didn't put any logical test there. Now I would put test here. Now I say if 1% of this gross is greater than 200,000. That's the condition. That is the logical test that I want to check. I can even put this 1% of annual gross in another bracket of its own. It will not affect things. It just means that system will check that appropriately. I hope you would understand this expression that I'm writing. It's not I just want to simplify it in a very clear way so that we understand what is really going on. Now we understand the first bracket. The second bracket, the first bracket is the entire if statement. The second bracket is for the first argument. Now I have, just for simplicity's sake, I want to put this 1% of N9, which is the annual gross, in a bracket of its own. Now it's checking for that to calculate it, whatever the result is, and it will check if it is greater than 200,000. That is the condition. Now I said, if this is true, if this condition is true, what should happen? What should happen is we will pick this 1% of N9 and add 200,000 to it. It's as simple as that. So we can put that 1% also in a bracket of its own. We can say 1% of N9. Okay, then outside that bracket, it will calculate that 1% of N9. Sorry, is N9 of N9. Then outside that bracket, you can say plus, can open and close bracket for that again, plus 20% of N9, like so. So if you look at it very well, we have checked for this condition. If it is true, we'll pick that 1% of N9. I only put it in its own bracket, plus then I open a bracket and close for 20% of N9. I could have written this on a straight line, but we can have a bizarre or outrageous result if care is not taken. So you must master the use of using parentheses. It is just to enclose things so that they will be calculated on their own. Now, this is the first condition. You can go over this video to understand this statement if it's not very clear. I will move to the last argument now, that is the value if 1% is not greater than 200,000, which I think is usually the case. So the value, if it is false, we simply pick 200,000 like so, and then add it to 20%. We can open and close bracket for 20%, so our system will calculate 20% of the gross, annual gross. If you click on enter, we are good to go. Please, you can check this formula again. This is the formula bar here. It looks muffed up, but since we started together, you should understand. I can quickly read it to you. If you check for this condition, if 1% of N9, that's the gross, is greater than 200,000, we don't need bracket for that. If it is true, that's the second argument here. Select 1% of N9, calculate it, and add it to 20% of N9. So as simple as that. I put those calculations because unlike 200,000 is a direct figure, so these ones are calculations. So it's better you put any calculation you want into brackets of its own so that it will calculate and then use the value in other places that you need. That's the second argument. The last argument is if this condition is not met, then what do you want to do? Take 200,000. It's a flat rate. You don't need for calculation to that. That's why it's not in any bracket. Then add it to 20% of the gross again, because I think a calculation on its own, so you may need to put it in bracket. Just understand how bracket works. I'll press escape now to get out of this, and we'll be fine to go. Please again remember, this is on annual calculation. It is not the tax we are paying nor the CRF that we are deducting. It is just for the purpose so that we get the annual tax, then we can prove it. Now that's the very first one, the CRF. The second one is any other ones. This may be the end of it. Some companies do not pay pension, even though they are required by law. If your staff is more than 5, I think you must be you must register with pension managers, insurance, housing fund, and so on and so forth. Let's just put pension for the purpose of this. Like we all know, pension is 8% on housing, transport, and what have you. So we can quickly do that. That means we need to expand our calculation here, and they still are on annual basis. So you can say this equal to, we have done this one before, 8% of, now I like to put things in bracket because I'm doing another calculation, so it will simplify things. Sum of this 3, H9 to J9, I close the bracket, I close the entire sum bracket, and I have that. This is the pension, 8% pension per annum. Should we guess? Now, alright, so another way whereby company try to reduce tax burden on their staff is if staff or even staff themselves makes the decision to have a voluntary pension contribution, that is VC they call it, if a staff is having that, you can include it as VC, or you can say voluntary contribution. We don't have it here, so we don't need to include it. Let's just stop at CRF and pension, or let's put NHF like we had, and that is 1%. All of this calculation, please, you may want to check the internet for current rates so that you will be in line with so this is 1% of basic, like we have for the staff that are registered with NHF. So here we'll just stop at those 3 allowed reductions. Now after that we can have the total relief in the sense that this is an amount that is allowed to be reduced or deducted from your annual gross before we calculate tax. The total relief here now is just the sum of these 3 excluding penalty, because penalty is not recognized, it is a non-statutory deduction. So we can have this to be equal to, let's just do auto sum of these 3, that's 812,000, and that is that about that. Now we can now have the taxable income after the total relief. Now bearing in mind that if you have other deductions or contribution like insurance and every other thing, you need to add them here after the CRF to have the total relief. Now here we can now have the taxable income, that is the amount that is actually due to be taxed, because not all this money is taxable. Because we have reduced it with all of this, then we can have a taxable income which will be equal to this gross minus total relief. So out of 2.4 million this Lagos man is expected to collect annually, the amount chargeable to tax that you can actually tax from him is 1.588 annually. We can replicate this for the rest of the staff. So this is the actual amount that we can tax. Now the tax itself now comes in, so you cannot have the annual tax. This will be, the formula is we have a tax table for it, which can consult online material for the tax rate in Nigeria, but usually you have the first 300,000 is 11%, the next 600,000, and so on and so forth like that. Please check the internet for that, because that, just like the CRM, we will need to write formula for it. That formula is a little bit cumbersome because it has nested if statement inside the if statement. I'm just going to copy and paste. We may try to see how we can implement it. There's no need to explain it. All we need is to understand how it works. So I'll pause this video and come back with the formula. Alright, welcome back. So I have the formula copied here from another so this is the formula here. So as you can see, it's if statement, and if you look through, we have another if statement inside it, and also another if statement, and so on and so forth. So if you have the time, you can sit down and read through. This is a reference, cell AQ. Obviously here we're talking about the taxable income. So we say if taxable income is less than or equal to 300,000, then the first condition is to calculate 7% of the taxable income, and the last condition is if it is greater, and so on and so this, what we need to do here is just to change this reference to our own taxable income name. That's the name of the cell. So if you look here, our taxable income is U9, that is U9 here for Lagos man. So we can just replicate or change that, that is AQ8 to U9, so that they will paste as formula and then we are good to go. So I'll quickly use this one of the provisions here to replace what's AQ9, replace it with U9. Make sure you match the case, then define it's AQ8. So find next, replace, or let's just replace all. I can look through, this is U9, it has replaced everything that was AQ8, it has replaced with U9. So this is what I want. I'll just copy this formula. If you are watching this and you need this formula, you can just pause this video and type out these things by yourself, please. So I just come here and instead of pasting here, I'll paste it in the formula bar. Just paste like so, and as you can see, it has selected the taxable income because of the U9 that we have done. It will calculate the annual tax for us. Now this is the annual tax on this gross, but after considering the total relief, this is what this man is expected to pay annually. Then we can drag down like so, and then we're good to go. We'll save our work. So far that's a mistake I've not been saving. Please try to master the habit of saving your work. Now this is what we have, but that is not all. Next, we need to calculate minimum in tax, because in Nigeria, if you're not earning up to 300,000 naira annually, you're supposed to pay 1% of your gross, annual gross rather. So that is how it is. Now to know the tax payable, you need to consider the two, because in some cases 1% of your tax of your gross income may even be higher than the annual tax calculated. So you're supposed to pick the tax payable will be the higher of annual tax and the minimum tax. So let's quickly calculate minimum tax. Here it equals to 1% of gross, 1% of N9, that's the annual gross, like so. This is that as that. I don't think any of these conditions have been met, but then that's how it is. Some cases 1% is greater than the annual tax. I've seen such things. So in this place now, we can now have the tax payable. The tax payable, because we need to consider these two items. Which of them is higher? Just like we have the CRF, we just replicate the formula for that. So it will pick the higher of these two for our tax payable. Do you understand? Now, so we can have equals to the if statement, if. I'll tab it to select. What am I checking? My logical text is if this is greater than this. So if I don't need bracket for that, because it's a direct thing. I'm just referencing. So if V9 is greater than the U9, what do I want to happen? What is the situation? Select, it should pick V9 if V9 is higher. Otherwise, the otherwise means that's it. We can only have two conditions: either this is higher or this is higher. If this is higher, if annual tax is higher, sorry, I was pointing to my if annual tax is higher, select annual tax. Otherwise, it means minimum tax is higher, then select minimum tax as the second argument. That will be all. Now we press enter. As you can see, it has selected 21,720, which is the higher of the two. Unfortunately, we don't have a situation whereby the minimum tax is higher. So now we know that this is the actual tax payable on annual basis. Now we need to prorate, because we are doing for March salary. Now if we are filing for annual tax, which you also do annual tax, after preparing this, we still need to prorate, because not all the staff of your organization would spend 12 calendar months in your organization. Some will join you in the middle of the month, whereas our tax calendar is just January to December. If there's anything, we need to prorate for it. So in that scenario now, we just need to have monthly tax. Do you understand now? Which will be this divided by 12. It's as simple as that. But again, if you have been doing this for annual payment, annual filing, we need to prorate. We will instead here have tax prorated, in the sense that we assume this is annually, but if a staff does not spend up to 12 months, he's not supposed to pay this amount, because what we say here is annual gross. This is what we expect this manager, not this staff. As a manager, this is what we expect to earn annually for that period. If it's changing the next month, you need to update your records, but for this month, this is what we expect you to earn annually, and we have calculated tax on annual basis for it. So if you have not spent up to 12 months, definitely you cannot pay this amount, because this is calculated on annual basis. Now what we need to do is, if it had been annual filing, we will need a column for the number of months that each staff has spent. Then we need to divide that, this gross or this tax payable, by the number of months to get the proration, that is the actual tax payable by that particular staff. But in this scenario, we are just calculating for March. That means everybody has spent 1 month, and we've calculated for annual payments here. So what we need to do is just to have monthly tax, or let's just say PAYE instead, which is the ultimate goal of this video. Is just equal to the tax payable divided by 12, like so. Now we can replicate this, and then we can have this. Guys, this is the PAYE. This is what we have been trying to work on all our video series so far. This is the deduction from the monthly gross now, not on the annual gross. This tax payable is on annual gross. I cannot explain that more better. Now we have through with what we are doing, but now we need to know how much this staff is now collecting, is taking home for this month. For that month, we are paying him 200,000, and we have calculated this penalty on monthly basis, and I've also calculated PAYE on monthly basis. That means we need to reduce his money by those two deductions, which will be equal to, this net will be equal to the monthly gross minus the penalty, which is monthly, and then minus the PAYE. That's the monthly PAYE is paying. So at the end of the day, this man is earning 200,000 on monthly. He will be going on with 181,523 after charging penalty. Of course, his penalty is 0, he doesn't have anything, and then the PAYE. Usually at the end of the month like this, we would have a pay slip to show staff how we went about their money, and then everybody would understand how it works. So guys, this I think wraps up our series of videos. Remember, if this had been an annual filing, all you need to do is create somewhere here, or before the designation and all, you have a number of months, like so. It could be 12, it could be 3 months, it could be 4, like so and like so. You can have, people can have 12, like that, and then this PAYE would have been equal to tax payable divided by the number of months that each person has spent, because it's not uniform. So this would have been what they will be paying annually. Okay, but that is not what we are doing. I'll Ctrl Z to undo these changes, and this will complete what we have been trying to do so far. For presentation, we can hide some of these things, all the CRF, what have you. You can hide them. Yeah, if you are submitting this as a filing returns, you may want to leave some of this, or you may want to calculate monthly for all of this if you are submitting monthly returns. But as it is now, I think we can just leave it on. This is what you usually have if you are filing. The full name, normally you would have the staff payer ID, which they use to identify the staff that you are, and then the annual gross followed by the monthly gross. They don't need to see this penalty, it is your business. And I've hidden some other things there. Can hide all of this. The annual tax may be needed because sometimes they need to see the tax table, tax payable, and then your payee. They don't need your net as well, but we'll leave it for the sake of this tutorial. Now this is what we have. You can label things, you know how to do that already. So guys, so far so good. This is what we have. You can save this March salary and then update for April and the rest of the month. Now at this junction, I would like to thank you so much for your patience and having been following this from day one. If you don't understand some of the things we did here, you may want to go back to a few videos to learn more. By the grace of God, we're not stopping here. We would try to explore other types of taxes, but that is not PAYE. That means withholding and some other audit aspect of things. If you are still interested, you can still stay on this channel and you will be notified if things comes up. So far, thank you so much for your time, and I will see you some other time. Bye bye.